On my left on the panel is Peter Krauth from the Silver Stock Investor. Eric Coffin is going to show up as soon as he's finished some interviews from HRA Advisories, Chen Li from What is Chen Buying and or Selling, and John Kaiser from Kaiser Research Online. So the first question, since we have so much time, is just a little bit of a summary of what they've been looking at, what they've been seeing as they've been going around conferences, and we'll go from Peter over to John to Chen about the current market sentiment. What have they gleaned out of it, and what are they talking about or telling their subscribers? So let's start off with you, Peter.
Well, there's no secret about the current sentiment. Obviously, it's still nice to see this many people here, convinced or deluded. I'm not sure, but I think that I'm telling subscribers that it's going to take a little time still. I think we need to see these things work themselves out. The Fed obviously messed up when they said that inflation was transitional, and that they don't want to, as much as they look bad and have a terrible track record, they don't want to mess this one up, although they will ultimately. But so I think that they are going to try and stay the course, probably hike once, maybe twice more, maybe break something, probably break something, and that'll be it. Central banks will probably firmly pause, if not start to scale back at that point. And I think as we see the gap close in real rates and ultimately eventually start to turn negative, I think that's when we're going to see things really start to pick up.
So your focus is on the U.S. central bank policy right now.
Yeah.
In terms of what's driving, mostly what you're doing is precious metals.
Exactly.
Okay. All right. John, what are you telling your
Well, when I was in
acolytes?
Vancouver in January, I faced an audience where there was virtually every seat in a room much bigger than this was full, and there were even people standing, and I was kind of stunned. I said, what's going on? Because 2022 was an awful year for everybody. And I asked the audience, how many people think we're in a bull market? And like one person put up their hand. So I asked the other question, how many think we're in a bear market? One person put up their hand, and I said, wow, it's like we're in the eye of a hurricane, perhaps having left the bear market behind and entering a major bull market driven by the competition between global West and global East, driving gold prices higher as central banks buy ever more gold, and also the energy transition creating new demand for copper, for lithium, and other metals. And that was great until the second quarter, when it's like we hit the wall, and it's been horrific ever since. My great hope had been the biggest prospecting season ever in the history of Canada, as all those boots on the ground visit all those pegmatites documented ages ago, but ignored because nobody needed lithium at the time. Easy to make on the surface discoveries. And then we got these fire closures in June. Lost 3 months of the entire season. Had 4 weeks on the ground in some areas. There's now a 1 month closure for the moose hunting season. And now they're predicting in Quebec an early cold winter, which once there's snow on the ground and it stays, boots on the ground are done. You either have targets that you can drill in the first quarter, or you got to wait until next June. So my big focus, the Lithium Mania 2.0, with an emphasis on the pegmatites in Canada and particularly James Bay region, it was completely blindsided by this climate-related development. And now, Wednesday, we hear that Powell thinks interest rates will stay elevated until 2026, with perhaps higher rates in between. And what I'm seeing is the public, and boomers especially, after making zero interest on their money for the past decade, are saying 5%, 6% term deposits, hallelujah, I'm there. And you're looking at all this other stuff going on in the big markets. The Dow's still perched in the stratosphere. You got all this AI disruption talk. You got China implosion talk. You got this endless Russian-Ukraine invasion talk. And then you even have the prospect that Trump might be the president in 2025, and the capital is gone. So this is really rough for the resource junior sector. I personally am focused on gold discovery and copper discovery type exploration plays, and the lithium mania. I think we'll see some companies emerge with a project in that they can drill in the first quarter. I think we'll get liftoff. The energy transition's not going to go away, even if Trump is president in 2025. But right now, you have to just buy your positions and hold and ride out the storm that's coming in the rest of this year.
Thank you, John. I think you've answered every question that I was about to ask.
Well, we can add more nuance later.
All right. Okay, Chen, briefly, your current market sentiment as you talk to on your newsletter and your subscribers, what are you telling them, or what are you telling yourself?
Well, it's a tough. It has so far has been very tough. Last month, just as John mentioned, there's a real interest rate, and there's $1 trillion. $1 trillion went to the U.S. government bond market. Okay, just in 1 month. You think about it, just like you feel like a sucking sound, suck everything out. It's very, very difficult. You know, I run my family asset. Okay, my subscribers usually are hedge fund or very wealthy individuals. So we went through the up and down cycles. So I know, so I put in money in different sectors. So this year actually I have some very big hit, but in different sector. I don't want to mention here, but right now I'm quite very, very defensive. You know, every stock I own, especially those big stock my family own, has to be very strong in in the capital. So you don't if you need to raise money, you have to be very, very careful, and it has to be very, very close to catalysts, and then the rest you have to just stay with it. So especially in the junior space has been so bad. My family involved in a lot of different juniors. We do private placement, or you buy from the open market, and then I look back in, this year so far, I would say probably 9 out of 10 are done. Even I do my best to pick. I have a lot of connections. I talk to a lot of management. It's still very, very difficult. It has been a difficult year. But at everything side, there's a two sides of the picture. Just as John said, there's the East and the West. Tomorrow, I'm going to talk a little bit more exciting part of it, which is the East. So there's a real gold rush going on right now in China. It just started last week. I mean, last month, but last week is the top is the gold premium reached $121 in China. If you don't know, if you can calculate it, this is a historical. So basically you can buy gold in any place else, in Tokyo, in Hong Kong, whatever, and then go bar, you transport to China and sell, you can make like $100, just like that. What does this mean? It's massive amount of gold right now, every day, it's flowing into China. I know we don't care. I know United States people doesn't care. Canadian probably doesn't care. But if this continues for a few weeks, there will be huge gold pile up in China, physical gold. And then one day the gold outside China will run thin because China is the biggest gold consumer. And then even in the high days of China when there was the biggest gold consumer overtaking India, in those years, only like $30 premium. We're talking about $121 premium. So we'll talk about that tomorrow. I think that excites me. And I believe in energy transition. The key for energy transition, one is lithium, like John pointed out. Another, I believe, is silver. Okay, so I've been working pretty hard with the Silver Institute, with all the other analysts, and trying to push them to see the bright side from the energy transition, especially in solar panel, I think they will make a significant change. You can see Silver Institute will host the annual forecast will come in on November 15th. And I will show you what happened in last year, November, silver happened. And I think it will repeat. Okay, so once people see there's such a huge gap between supply and demand, I mean, last year when they make it, that's the biggest deficit in past decade, and then immediately silver make a move. And then they predict this year the deficit will shrink to little bit. They will make a major change on November 15th, I believe. So for the investors, if you want to look up, those are the things coming. And I'm quite excited. I think this is a good opportunity. When everybody's selling, it may be a time to pick up a different stock. So I'm quite excited.
Joe, do you mind if I ask Chen a question about gold in China?
Well, it's pretty unusual to do that, but yeah. Okay.
Go ahead, shoot me.
China's been the biggest gold producer in the world for more than a decade. And I've done the numbers, and if they kept the central bank bought everything, they should have as much gold as Fort Knox, but they don't. Their official holdings are still relatively small. If China's now importing gold, where's all the gold that they're producing going to?
Yeah, all the gold, China is the largest, sometimes it's the largest, some second largest, a very large gold producer in the world, okay? So all the gold goes to the people, go to their earring, go to the necklace, go to gold bars, right?
So it all goes to retail.
All goes to retail. And the situation, I mean, I will discuss more detail. I don't want to take too much time here. So why this phenomenon is happening right now in China? You have to think China is very different than here. You have a deflation, not inflation. You have a negative interest rate. And then housing market has been going down every year for the past 3 years. So think about all these people who used to own 5 apartments, right? They think they hold on, this will be for their life saving, for their retirement. What do they think, right? They very reasonably for them to sell maybe one of those, and then to put half of those in gold, right? I mean, that's the only thing goes up. Even with gold is quite flat and lower in US dollar, in Chinese yuan is going up because Chinese currency is weak. So you think about that, right? I mean, they may put maybe a quarter in US dollar, but they worry about US dollar will collapse one day. Some people are worried. So it's just a little bit diversification. But in China, there's so much wealth created in the past 30 years. You just put a little bit into gold. That's what leads to a gold rush right now, every day.
Okay. Anybody else got questions for themselves? We're good? Okay. So talking about the disconnect, so we had Beaver Creek, and then somebody was talking about, this major disconnect, probably more related to gold, between the gold price, and even though it's flat to up, as Chen pointed out, and as many of you'll see, in other currencies, gold is doing quite well. But there's obviously a disconnect with equities. Some of that might be because there's no U.S. investment in gold ETFs, and that's not going into equities. But putting that into gold, a lot of people are probably down on their investments, 50, 60% sometimes. In the current market that, we're hoping for a rebound, and is this as cheap as it's going to get? Let's go through, like, if somebody was like that, came to you, and they were thinking, well, if this is the bottom, do I sell what I think is an undervalued stock to buy another one? And if I did, like, what kind of advice would you give them with respect to, here's this better stock? Is it jurisdiction? Is it commodity? Is it stage? What kind of logic would you say? Well, take the loss on that one. Cut your losses. Try this one because this one will go. What would be your list of things that you would tell them?
So in my case, I would say, my newsletter is on silver, so I'm going to talk about silver. I would, in terms of stage, I would probably be focusing on two ends of the producers and the explorers as opposed to the developers.
And just, I know that's most retail avoids development, and let's just get that thing out there.
Yep.
The elephant. Why do we avoid development?
I think it's the time lag there's it's expensive. It can be fraught with risk and problems in terms of cost overruns. We're in an inflationary environment. I mean, you could be looking at political issues. You could be looking at all kinds of things that come up during that. And then, if they run into obstacles that slow down the development, people just become disenchanted. And I was talking to someone just this morning who was telling me that I think it's Pierre Lassonde himself who said that the Lassonde curve that he came up with has gotten extended. So it's as if you stretch that part between the discovery and the start of production. So that whole development part got stretched out, and so it's much longer now, right? And fraught with more risk. So it makes sense that people realize this and become sort of disenchanted with it and stay away from it, and favor the other two ends that have potentially better payoff with. I'm not going to say less risk, certainly on the exploration side, but on the production side, once you make it to production, there are still risks, but they're significantly lower, obviously, than getting your way through development. So to me, that makes sense. What was the other part of the question?
Well, in terms of like jurisdiction as well, like if you're
Yes.
focused on silver, which you're telling me you are,
Right.
which I'm okay with, you be you. So just in terms of silver, like we've talked about, like I talked last time about Mexican mining reforms,
Right.
and Mexico is a big silver producer. What we're seeing in Peru, though Peru might be rebounding, another major silver producer, like jurisdictionally, where do you go? Where are you thinking?
Well, that's a good point, because I'm not all that comfortable with Chile or Peru. Colombia seems to have some issues. Ecuador seems to have some issues. Mexico has some issues now. So it does beg the question, where do you go? And there aren't that many other places to go. To some extent, there's Australia. I've looked at that in terms of, public companies that fit at least my criteria. There isn't that much. That leaves Canada, the US, maybe some parts of Europe. It leaves some parts of South America, perhaps parts of Argentina. One I like a lot is Morocco, actually. There's basically one company there that's operating and doing very well and growing very quickly. So
You're talking about Aya?
that's right.
Yeah.
Exactly. Aya Gold and Silver. That's someone who's really sort of, it has been operating for quite some time, but it's really been revived in the last few years. And so, I've also, I think I mentioned actually in a panel in the last, back in May, someone asked about jurisdiction. And, it wouldn't be necessarily specific to silver, but I see a lot of activity happening in Saudi Arabia now. And I think that, you've got companies like Barrick who've gone in. I think you've got Ivanhoe.
Yeah, you've
who've
got
gone in.
Barrick's been there for a while,
Right.
with Jabal Sayid, and then you have Ivanhoe Electric, as you mentioned, doing a joint venture with their geophysics.
Right.
And one company I had met, I don't know if you met the same one, in Beaver Creek, they're doing a joint venture as well in Saudi, but also they're using that Saudi money to invest in Morocco.
Right.
So yeah, interesting. That, but are you totally off of Mexico and
No,
and
not at all.
And
I
Peru?
mean, what I'm hearing is that to some extent, a lot of what was put forward in terms of changing these mining laws, a lot of that is likely to get scaled back considerably. It needs to go through a lot of steps before it would ultimately be adopted. There's an election, I think, as well coming up.
It's coming up next year,
Right.
and what's his name? AMLO cannot run.
Right.
Right.
Exactly. And Mexico's the largest, by far the largest silver producing nation, and relies significantly on mining. So I think that is likely to get scaled back in some way, and that Mexico will continue to kind of, I'm not saying there won't be any changes, but I think that they won't be as dramatic or as severe as they initially were proposed.
Okay,
So-
yeah, we just have to acknowledge the addition of Deion Sanders. And so in terms of, like, we went through some questions, Eric, about current market sentiment, and you know, briefly, I mean, what are you telling your subscribers in your HRA advisors about the current market, and do we go fetal, or do we start thinking more?
It's a tough financing environment right now, so, I mean, it takes a little bit of bravery if you're gonna start buying something that doesn't already have some cash in the bank. I mean, most of the companies, not all, but most of the companies that I follow are in reasonable shape that way, although a lot of them will probably have to finance, you know, once we get into 2024. But, I mean, really, the only two things that seem to be working are companies that either already have, and, you know, Fireweed that was in my block is an example, a widely acknowledged world-class project, and very importantly, in their case, and hopefully you can find this in other companies, they've got sponsorship of a group that they can go back to, like, over and over again.
Yeah,
pretty much.
access to capital.
Access to capital. The other thing that's working is, you know, discovery stories, and, you know, I'm a sucker for drill plays. That's not a big secret. It's also not a big secret that drill plays are obviously much higher risk. Ideally, what you find is someone that's got targets that have scale potential that is not already priced to success, hopefully, so that if they do pull a couple of good drill holes, the market really pays attention and gives them some price. I mean, in between those two extremes, it's tough. I mean, there's stuff that I like and that I own, and if it gets cheap enough, I accumulate it, you know, where I just acknowledge the fact that the timeline's going to be longer. Like, you got to appreciate that going into it. You know, I mean, another company I really like, FPX, I mean, they put out, I guess, good news today. There wasn't really a lot of details on what the deal really was, but that's one where I'm very comfortable that's going to be a very low cost, long life nickel producer. But, you know, you're getting into that part of the Lassonde curve. So if you're buying it, you got to be ready to be willing to hold it for 2 or 3 years. I mean, if you got to know what you're getting into with these things.
Okay. Going to John with a similar question that I had for Peter in terms of, you know, if somebody is down significantly on a position and they want to say, well, should I sell this? And if I sell it, what should I buy? What would be your checklist for them in terms of changing a company in their portfolio? John.
Oh, you want me to figure out which ones to sell in order to?
No. I want you to say, like, okay, here's something like I've got a position, it's cheap, but if there's a reason for me to sell it right now because this one's so much better, what is that one? And what's your checklist to describe to me what that one is? It doesn't have to be a company.
In general, periodically, everybody should look at what's in their portfolio and pretend that you don't own this yet and have come across it, and, you know, not just like, would you buy it for yourself for the first time, but would you have your mother buy this stock at this great price at this time right now? And if not, you have to seriously consider that this is an opportunity cost position, and you might want to think of what would you want your mother with her little risk corner of her portfolio to buy right now. At the moment, I think the advanced projects, most of them kind of need a buyout by a bigger company, but most of the projects don't have the scale needed by the very big companies who themselves are content to just sit with what they have. And the intermediates, they see a potential interim downtrend for metal prices, even though we have all this energy transition predictions about copper, nickel, and so on being in short supply. They're standing back. So sitting on these, Lassonde curve trough type companies, you might also want to consider like buying them later and wait out to see what happens with the China implosion. And in terms of what to buy, well, if you find one of these that you haven't been stuck in for several years, like for example, FPX nickel, I've been in this for a decade now. It's seriously undervalued based on the fundamentals. And then it gets this shot out of the blue from a First Nations group claiming that after clear-cut logging the most of their backyard, it's now sacred territory and they don't want a relatively constrained hole in the ground because they're against that sort of thing, and the stock just sags. If I wasn't a shareholder of that now, I would be buying that stock. As a shareholder, I'm almost tempted to say, okay, let's give it a wait, sell that and buy something else. I'm not going to do that because stories like this are so unique that tomorrow something unusual could happen and it might take off because of its special energy transition nature. But exploration, discovery exploration, as Eric says, that's the place where I would be looking to put nickels now. And right now, I'm looking at the James Bay region of Quebec, where I have 65 companies. Half of them are sort of junk companies that don't know what they're doing. Others are companies that do know what they're doing in this backyard, and they're looking for these pegmatites that are just sitting there that have rock values of $500 plus at the current lithium price that are open pittable. This doesn't exist in the gold or silver or copper exploration game. So there, and the market hasn't bought into this lithium story yet. So there's a cheap place where you could now place really ridiculously cheap bets that could be up 10, 100 times over the next year.
Sorry, you're saying that 65 companies are exploring now for
I
in the
have
James Bay?
documented 65
Wow.
companies with land in the James Bay region, and somebody just told me another Australian company has farmed into one. So this is a list that's growing.
Well, what I found about the James Bay lithium story, and a few stories, is the ASX is a bit ahead of us. And they've been driving a lot of the liquidity and the valuations, especially for Patriot Battery, and also driving a bit of the M&A there. And it's only the Canadians that have caught up recently.
Yeah,
In terms of the equity, a lot of the equity that Patriot Battery, funded before Albemarle came in was actually from Australia.
Yes,
not from Canada.
they've been through this from 2015-18. In fact, Liontown's Kathleen Turner has a reasonably solid $6 billion bid from Albemarle to take out the Kathleen Valley project, which is in essence the same thing as what Patriot Battery Metals has already delivered, except they have 4 more years of feasibility demonstration and permitting.
So how would you describe to somebody who went through and lost a lot of money, potentially, not me, on the Wabuchi thing, the Nemaska lithium? Or how would you put that into context versus what's happening now?
The lithium winter was brutal. I mean, lithium carbonate was $10, $15 a pound when all the EV hype started. Then the Australians were so good at mobilizing new supply from these pegmatites that were just there for the taking that they crashed the price of lithium below $3 per pound, where absolutely nothing works. And Nemaska, they were doing the full thing. They didn't have all the process technology worked out, and so they got caught between a rock and a hard place and ended up bankrupt. That will be put into production by Livent and I think it's
Alchem.
Alchem, who are merging together, and that will end up making money. But that lithium winter between 2019 and 2020 was absolutely brutal. Patriot Battery Metal never got around to drilling this because they were an ambulance chasing type company that just was playing the hype, and then the hype totally fizzled. This time around, the car sector has really picked up on this and has plans in motion where even if lithium goes back to $5 a pound, that will be temporary. I think between $5 and $10 a pound is the future. The only hope for cheaper is that direct lithium extraction is so successful that it crashes the price per pound of lithium carbonate below $5, in which case only the super best lithium pegmatite plays will stay in the running.
Yeah, I absolutely agree, because those things I think are on the margin and they work at really high prices and they don't work at low prices. But the difference to me as well is the infrastructure that the car companies and the battery manufacturers are putting into Quebec, that Nemaska never had that kind of capital. And at Bécancour, it's Ford, it's Volkswagen, it's EcoPro that are building the battery manufacturer, and obviously the Quebec government is going to support it, but there's a lot of players than just the Quebec-led funds that are driving that. Okay, to you, Chen.
I just like to add a little bit to John's comment. I think one way that if lithium really to crush actually is the sodium to really coming. The story is booming in China right now because there are a lot of sodium batteries coming out. So they will take out the lower end of lithium battery, and the technology can evolve, right? So if sodium can get more closer and closer efficiency at lithium, if that happened, that would be really, really devastating.
Well,
for the
I think
lithium space.
your point is absolutely fundamental in terms of technology is not constant. And so technology will change what they want in the batteries, but then it'll change what goes into them. And then also the other thing that's changing is that not only is the US and Europe and other places thinking about what they need in their own supply chains, trying to do everything ex-China, China has to think about where they're going to get their stuff. And if they have to say, well, I'm not going to get enough lithium from Australia, where else am I going to go? So that's what we're seeing right now. I was in Brazil a couple months ago. I can't remember, but I was there. So BYD, which is one of the largest EV manufacturers in China, I've never heard of them, but they are huge. And they are building a battery manufacturing plant in Chile to get access to the Salar de Atacama, the lithium there. And they're also building an LFP plant in Brazil. So they can get the lithium, from projects like Sigma. They can get the iron ore, Vale, and they can also get potassium, the potash, from there too. So they're going to build the batteries there. And it's weird is that Brazil, unlike most countries in South America, has a big manufacturing sector. And so I said to him, well, why don't you just build the EVs yourself? Why do you send the batteries away? Just build them yourself. I said, there's no market for EVs there because they don't have the infrastructure to do anything and nobody wants them. So interesting, just something to think about. Okay?
Yeah, another area actually is really booming is the phosphate.
Yep.
Phosphate because, I follow China's market pretty closely. I remember I was on CNBC 10 years ago. I said lithium looks really strong because China at that time was taking off. And then the anchor asked me, what is lithium? He has no idea what lithium is at that time. So, right now there seems to be the technology. What my contacts telling me really is a lithium phosphate ion battery really taking off. That's the killing the nickel, whatever, cobalt, those kind of. So phosphate actually looks rather interesting. The phosphate price you can see is just going up like crazy. So that's another metal to consider. Mm-hmm. But again, those technology change a lot. So when you invest in commodity, it takes a long time. The cycle is 5-10 years. So you have to make sure this will be boom when they unless you can exit before that, before the bust. So I also want to comment on what Peter said, that the Morocco, the Aya gold and silver, right? They used to call Maya gold and silver, and I quite proud. It was my top silver pick for very beginning when it was like a 10-20 cents, and when it was a struggle. I went to Morocco 3 times to visit their project, the Gwender. And actually I watched the project, watch the company, how they succeed. So they are very high-grade silver, right? And then they're really not making too much free cash flow. They make some free cash flow. That's enough. They don't need to come back to the market. When they will keep coming back to the market, the stock actually stay flat for a very long time. I think it was 3-4 years. You can ask Guy Goulet. Actually, he's going to be on my panel. He's the founder and ex-CEO of Maya Gold and Silver, not Aya Gold and Silver. So it just stayed very, very flat because they need money to build a mine, And then at a certain point, the mine start cash flow just a little bit, free cash flow a little bit. That's the turning point because they don't need to raise money anymore. They can drill. And then they don't need to struggle every year, struggle and need to, make the end need to make sure the balance sheet is okay. No, they have a little bit extra money, start to drill, then they find the high grade silver. That's how when the stock started taking off. So I followed that more than 10 years, and this is one of the success formula you can think about for a lot of junior company. But of course, that company is very unique. Not every junior is different. So that's just my experience.
I would like to say that these lithium iron phosphate cars, they are an inadequate solution. It may work in Europe, which is why the Europeans are freaking out by China exporting at surplus, because they have smaller driving distances, narrow roads, and so on. But in Canada and United States, with wide open distances, the LFP car will never be the mass market adoption required to shift away from ICE cars. That's going to happen when the solid-state lithium-ion battery becomes reality. And that's been the holy grail forever. But Toyota has come out and said, we have a breakthrough, not in a new configuration, but in the manufacturing process. We know how to make a lithium solid-state battery, which allows lithium metal to be used in the anode, which means twice as much lithium required by 2030 than the IEA predicts. And this battery requires nickel, lots of it. I don't know about cobalt, but the shifting between different technologies. This battery will be 1,200 kilometers on a 10-minute charge. That is a winner, especially if the high-end version they hope to produce by 2027 can be continue to refine the manufacturing process efficiency and make their Camrys and Corollas have the same range and charge time. This is going to be the Tesla killer product of Toyota, which is why that deal yesterday by the Panasonic and Toyota consortium with FPX Nickel on the collaboration on basically the refinery to make nickel sulfate, that's kind of a warning shot that the solid-state lithium-ion battery is going to rule the 2030s.
Oh, yeah, I fully agree. The solid-state lithium-ion battery is going to rule. But I don't know whether they have set which direction yet. But I know there's a furious competition between Japan, China, and Korea, and then maybe United States in some area. I think there's a California, some startup trying to do that. But yeah, absolutely. For investors, you need to watch who will be the winner. And this will be the way. Solid state is, as John said, the density much better, charging much better, and much safer too than a regular lithium battery.
If it is safe. That's been the problem with these, with the solid state ones, is the dendrite growth from the lithium metal in the anode punctures the electrolyte and creates thermal runaway and makes your car explode.
That's a happy thought. Moving on. Eric, you mentioned like in terms of stage, if somebody was selling something and buying something new, you would advise, the higher risk, early stage exploration play discovery is, what you're aiming for. But have you tried to refine a jurisdiction or commodity in terms of how when you're looking at exploration, or are you agnostic?
I'm fairly agnostic. I mean, there's a few obvious jurisdictions like pretty much anywhere in Russia, China, all the obvious places we know about to stay away from. I'm staying away from most of them. North America seems likely to be fairly painless. I don't expect to get big surprises there. I've come around to liking the Guyana Shield more than I used to, and that area, the Guianas especially, had a pretty well-deserved reputation for graft on a galactic scale, and ironically, really what seems to fix that problem is the offshore oil and gas, because they're making so much fucking money from the oil and gas that they don't bother trying to grip anybody else. I mean, Guyana's economy grew by, I think it was 60% last year, in 1 year. That's the kind of impact oil and gas has. A deal that I follow that's been doing quite well is next door in Suriname. Suriname doesn't seem to have been as bad that way as Guyana had a reputation for being, and they're probably, I don't know, 5-10 years behind. I mean, as far as I know, the oil and gas reefs extend far enough to the east that they should have some of it too. They're just not very far along. They're just getting going on testing stuff.
Yeah.
But, you know, that's really changed that whole area. Plus, the other thing it's done is you're going to see rapid improvement in infrastructure. I mean, one company I follow, Golden Shield, I mean, you know Leo really well, same as me. And he said the money those guys are pouring into, he said, we're fairly far south in Guyana, and he said, anytime you get that from the coast anywhere in the Guyana Shield, it's probably barges that gets pretty sketchy in terms of infrastructure. But he said the Guyana government right now, they kind of literally have more money to know what to do with. So he said they're just building roads and hydro and shit like everywhere.
Yeah.
Like,
And I guess some of that is being driven by the, geopolitical risk escalating in West Africa.
Yeah.
And then we're dealing with a lot of the similar geology, better time zone for a lot of North American-based precious
I mean,
metal companies.
I still like Burkina, but it seems to, and I understand some of the issues, but I mean, I've owned Orezone forever. I'm really good friends with, Mike and Patty, and they don't seem to have problems, but they seem to have a real problem getting the market to believe they don't have problems.
Yeah, and that's usually the problems with the Nevsons, rock skulls as well, that they have to diversify, or they offer big dividends to show that there's less geopolitical risk and get a lower discount rate.
Yeah.
But jurisdictionally, you're not, you avoid certain, but otherwise you will listen to anything.
Yeah, pretty much. I mean, there's countries that I think are fine geopolitically, like Brazil, that for whatever reason, I've never had a lot of luck there, finding stuff that pick up market attention. But there are, there's one here that you brought. I mean, they seem to be getting past that, because it seemed in the past that Brazil was tough.
Yes, absolutely. When I worked in South America for some major mining companies, Brazil was basically the only people that could make money in Brazil were the Brazilians. But now with Vale basically divesting assets, and they need more capital, and they're getting it from other places. And now they seem to have their own money. And I know that Canaccord Genuity are putting their first conference down there in Sao Paulo.
Yeah.
So there's money to be tapped there. And because retail is weak in Canada and, investment is weak, they're going straight to where the mines are and where the people who have money are. And that's definitely Brazil. And then you'll see bigger conferences as well. We were talking about Saudi. They're definitely got more money than dogs spelt backwards. And they're definitely investing not only in Saudi, but they're all over Africa, as well as, they're taking a 10% stake in Vale with their private investment fund.
Do you feel the Saudis are...
Wait a second. I don't get questions.
Have they
Nobody
evolved
asks
to the
me
point
questions.
where the hard rock deals make sense? Because, I mean, I remember looking at stuff years ago there, and, I mean, the rocks were great. But the Saudis were so used to doing oil and gas deals, they would try to structure it like an oil and gas deal, which just does not make sense.
I think like now they're getting a lot more advice on the mining side, and they're doing probably what they did 40 years ago with oil and gas. They're getting a lot of expats in, and they're helping them get their mining up to speed. Like when I went to the Colorado School of Mines, there was a lot of people from the Middle East, but they were all there for oil. There was nobody there for mining.
Right.
I think there was one guy from Oman. But now, I'm sure they're now getting more people up to speed, but that will take some time. I mean, they're almost the opposite in terms of what we're dealing with. Like, we have a lot of people, a lot of experience in the mining industry, but no capital to push anything forward. They have the opposite issue, where they have more than enough capital, but they just don't have the infrastructure in terms of intellectual resources to move it forward. But they definitely are looking all over the world as much as they can. Okay, so we've got like a little bit of time left. I'll just go through a pick. If somebody was selling, what would you say this is the one to consider. Eric? First, do you want to wait?
Yeah, let me think. Just trying to think short-term timing.
Or you
here.
could tell them short or long,
Yeah.
because most of the stuff now will
Well,
probably
I
be
mean,
protracted.
there's two that have results coming imminently that I don't think either one's priced for good results. So, I mean, one of them is the one that was in my block, the San Lorenzo Gold. I really like their project. They should have 4 holes out probably next week, might be the week after.
Where's the project?
The project is in Chile. It's about 20 kilometers south of El Salvador mine.
Oh, okay, and it's gold.
Yeah, I mean, it's got the same rocks and some of the same structures. So I mean, yeah, there's a bunch of porphyry targets.
Okay.
And like they drilled a discovery hole last year, a couple hundred meters down. I think it started. It was like 120 meters of 1.5 grams. There's some copper, but not a ton. The geo running the program, who lives down there, he's convinced he's just above the carapace. I'm looking at this, and they've also got like fairly high grade epithermal veins, also probably above porphyries. But I'm like, I'm all for finding a porphyry, guys. But if you can drill a bunch more holes like this, who gives a fuck? Like, worry about one thing at a time. The other one, and this is one you and I share. That it's a crap market, but even in a crap market, I'm surprised these guys aren't seeing some anticipatory buying, and that's Headwater.
Yeah.
I mean, they've got so many holes coming from so many great targets. 2 or 3 of which have already reported really good drill results. I'm honestly a little bit shocked.
And especially they don't have to go back to the markets.
They don't have to go back to the market, no.
So-
I mean, Newcrest is paying for everything, and usually when the market's bad, everybody gets paranoid. And I got a feeling there's some paranoia because we haven't seen results yet. But I mean, when I talked to Caleb, he said, I can't remember the name of it, you might know. They use a very well-known Nevada-based lab, and he said they're just not giving me the turnaround that I thought they were going to give me.
Yeah.
So he said I got nothing. And the smaller programs, I think he wants to kind of batch everything and put it out, right? I mean, the bigger ones like Spring Peak, it'll be a bunch of little ones.
Brent was just there. When I went to Nevada to see I-80, he went to go see Headwater in their Oregon property, so we should have an update in the weekend from them. Headwater, and I might see San Lorenzo. I'm going to go down to Chile Explore in October, so I'll be down in Chile. So hopefully I catch up with these guys as well.
Yeah, it's a pretty interesting project.
Peter?
So it was, who would you sell? Is that it?
No, who would you? No,
you
you
buy?
can't tell them what to sell because you don't know what they own.
Give the people what they want, Peter.
Yeah, it says, sell this.
Who would you buy from?
Yeah, who would you buy? Like, who would you like give them something if they already think that they want to sell something?
I see.
Who would you buy?
I'm going to say probably Summa Silver.
Summa.
Summa.
How do you spell? S-U-M-M?
Summa.
Okay.
So they are in Tonopah, Nevada. They have, and as well in New Mexico. So their Tonopah project is basically the neighbor to Black Rock Silver's project, just across the highway. And it's called the Hughes Project, and they're getting some fantastic hits, and they're doing these like multiple 100-meter and multiple kilometer step outs from where the historical mining was, and they're getting fantastic hits. So really, to me, very, very exciting. And when you look at what they have in New Mexico, this is a historic mining district, and they think that it could actually be potentially one of the most productive historic vein systems to come. So because there's a lot of underground workings, they're getting, again, fantastic grades in their drilling. There's some very basic old infrastructure, so there's that. But they've apparently only explored something like, a couple of percent of what's out there. And they're if you add up the length of the veins, it's like tens of kilometers worth of veins. So I really, really like what they're doing and the potential upside. And I think it's a stock that's kind of held its own. It's compared to peers, it's actually held its own. It's obviously down from its peak, like pretty much everyone. But I think the quality of the project and the management, and they're fully cashed up. So there's no issues with that. And I think that's certainly one to take a really close look at.
Okay. John?
In June of last year, at the Toronto Metals Investor Forum, I introduced Brunswick Exploration 15-20 cents as a major Canadian pegmatite lithium junior. It's now 90 cents to $1, so up 4 or 5 times in price. They now have the Mirage project, which was like low-hanging fruit harvested, a report of a spodumene boulder. They picked up the option in January of this year. They now have a corridor 850 meters by almost 3 kilometers long of pegmatite outcrops that are full of spodumene, similar to a 3-kilometer boulder train to the southwest. It is, with its 200 million or so shares out, priced at $200 million, but it has the sort of footprint and scale that it could be the next Patriot Battery Metals. There's a drill program, 6,000 meters underway right now to try and sort out the geometry. Maybe it's skinny crisscrossing dikes and all that average out to a lower grade, or maybe these are all just tips of a big giant iceberg beneath. We will find out in a month or so whether this thing is another rocket ship like PMET. And even if it isn't, they still have lots of other land in the James Bay region where their boots on the ground are just getting to now and hoping to get enough done elsewhere. So they have additional prospects to drill in the first quarter of next year.
Are they well funded?
Yeah, they raised $16 million, BRW on the venture. So they don't need to raise money at this stage. They did it all around 75, 80 cents in March, April.
Okay. Chen?
Yeah, hi. There's a lot of interesting stock out there. Actually, I also own Headwater, I own Sandara. But I just, for me, I'm come from United States, so it tend to have a tendency, I like to be listed in the US because we can buy it free. Basically, they're free trading. So I kind of like stock that can be buy, freely in the United States. So among all these, actually, relatively speaking, there's only one, which is EMX. I think they're here, right? So it's reasonable price. It's, if you look at it, if there's royalty company, they're quite cheap, right? And then they are about to pay the first dividend. You can see that those one of the companies struggle. They're gonna come out and free cash flow. They just had a deal with a Chinese company called Zijin. Right, so they got a royalty settle in Serbia, and they have a free cash. I can see foreseeable free cash flow coming in. It's a defensive move because I don't see too much downside. But if you think metal will really go up, there's a different strategy with that, right? So you can go for aggressive exploration companies, right? I have. Like the stock I'm just putting, my family is putting money is Goliath. They just have spectacular results. McEwen and Crescat is putting money in. And then the stock is actually, it's not at a very high, right? It's coming in and then build around the base around that. And then they announce their visible goals throughout. So something very exciting. They should have results in the next few months. So it's mostly de-risked, and stock came down because of financing, with the recent refinancing, Rob McEwen and Crescat. But just some ideas you can think about.
Great. Thank you very much. And so ends our panel, and I believe the drinks are on. Thank you very much.
Thanks, Joe.